I don't think people are missing out by not being part of the SpaceX IPO. I think one of the big reasons people feel like they want to be part of it is SpaceX has grown so much already, but all that growth happened in the private markets. There's a lot of studies out there that saying
Hmm.
companies are staying private a lot longer than they used to. And when we talk about an IPO, it's the initial
Right.
public offering. So it's when a company goes from a privately held company to offering stock to the public. And there's a lot of things that go on there. But previously, companies would be coming public much sooner in their life cycle. So,
Yeah.
right now they're talking about SpaceX is going to be coming to market at a valuation of about $1.8 trillion. That would make it one of the top stocks in the S&P 500 traded on the exchange instantly.
Hmm.
But 10 years ago, or maybe even 5 years ago, SpaceX probably would have listed publicly, gone through an IPO process when it was like 2 to 5 billion. And there was still so much more growth potential out there. I'm worried that so much growth has already happened that, this isn't an opportunity for retail investors to really capture that instant or rapid growth from a new company. It's more a liquidity event
Right.
for the people that already have shares, right? It's giving them the opportunity to eventually cash out some of this tremendous gain that they've had in SpaceX as a company.
I think people are just already convinced that this is going to be something that, 10x's as an IPO. And I'm going to get to some statistics on IPOs in a second because I think it's informative to know what we're talking about when we talk about the performance of IPOs. Okay. That set aside, okay,
Mm-hmm.
nobody is missing out. I think people hear these stories about, you know, Bill Gates's secretary who got in on the, you know, ground floor of Microsoft and all, and has now got $25 million because they got in at the beginning. Okay. You're not getting in at the beginning with an IPO. Okay. You're just being allocated shares that will, if you get the IPO, and that's a big if, I'll talk about that too. If you get it, I think it's currently set to price at $135 a share on Friday. If you get an allocation to that, it just means that your purchase price is $135 a share. You've got to then assume that the market is going to elevate the price of that stock up over $135 a share. And it may. It absolutely
Yeah,
may.
easily could.
Right. But to your point, I don't know how much profit market price appreciation is left baked in from that 135 offering price to where it's going to open on Friday. Now, could it open at $200 a share? Sure. And believe me, I was around in 1999 and 2000 to see these kind of things like go up 100% in a day. So I've seen these kind of silly things happen. But there's some really good statistics about IPOs. And there was an analyst over at Truist Bank that took a look at what was the IPO performance on, the week after, the 1 month after, the 3 months
Yeah.
after. Okay. And he went back and he analyzed the performance of the last 30 major IPOs. Okay. Facebook, Twitter, Alibaba, Shopify, Block, Twilio, the Dropbox, Spotify, the ones that people know, right? The people that were like,
Mm-hmm.
I'm sure Peloton's in there somewhere too. But anyway, okay. So the big ones, right? Like if you could have gotten into Dropbox or Spotify or Pinterest or one of those other ones, Airbnb, the big ones. After 1 week, okay, the average increase in price from the IPO price 1 week later was plus 4%.
Okay. That's not that exciting.
Well, that's exactly okay. And that's kind of now I've just tipped my hand about what my opinion is on this. Okay. Here's the other statistic that makes it really interesting too, Nate, is that 1 week later of the top 30 big major IPOs, only 57 of them were actually positive. So you're coin flipping here for an on average return 1 week later of 4%.